Here's what most people completely miss. Once you hit $100,000, you're already 1/3 of the way to $1 million. Even though on paper that's just 10%. Sounds crazy, right? This is where smart investors flip the game. It's not just about saving harder. It's about letting compounding make your money work harder, faster, and non-stop. Today we're breaking down exactly why the first 100,000 is the toughest, how the math accelerates from there, and the specific steps you can follow to fast-track your way to millionaire status. And trust me, step 3 is where most people mess up without even knowing it. If you want to stop wasting time and start playing the wealth game smarter, hit subscribe now and let's get into it. Getting to your first $100,000 takes real work. You're saving what you can, cutting back on extras, maybe working a side hustle. You finally start investing, but the numbers move slow. A 10% return on $10,000? That's just $1,000. It helps, but it doesn't feel like real progress. This is the part where most people feel stuck. You're putting in the work, doing everything right, but the numbers barely move. It feels like you're grinding every day and getting nowhere. Your money hasn't started working for you yet. And that's what makes this phase so frustrating. It's all effort with almost no reward. But here's what most people miss. During this time, you're building the habits that actually grow wealth. You're learning how to be consistent, how to stay calm when the market dips, and how to keep going when it's slow. These are the habits that matter most. And when you finally hit $100,000, something changes. The numbers get bigger. The returns feel real. A 10% gain now adds $10,000 to your account, not $1,000. For the first time, your money starts helping you build more money. That's the turning point. The game shifts here, and it only gets more powerful from this point on. Now that you've hit $100,000, things start to change. You're no longer relying on what you save. Your money is finally growing on its own. A 10% return on $100,000 adds $10,000 in a year. That extra $10,000 starts earning too. This is compounding. Your returns generate more returns. And over time, it builds faster than most people expect. If you left that $100,000 invested in a simple long-term portfolio and didn't touch it, it could grow to over $250,000 in 10 years. Stay in for 25 years, and it has the potential to cross $1 million. That isn't hype. That's what consistent, reinvested growth looks like over time. This is the moment where your money starts to carry the load. The key is to stay invested. Reinvest your gains and avoid jumping in and out of the market. Let the system run. From here, it's less about effort and more about consistency. If this is starting to click, hit subscribe because the next step is where most people quietly lose their edge. Most people think hitting $100,000 is the finish line. It's not. It's where things finally start working and where many people start slipping. The first mistake is getting impatient. After doing the hard part, people chase high-risk stocks or jump on crypto trends. But investors who tried to time the market over a 20-year span earned up to 40% less than those who simply stayed in. The second mistake is fear. One rough month, and people pull out too early. Missing the 10 best market days in 2 decades could cut your returns in half, not because of the investment, but because of bad timing. Then comes lifestyle inflation. You earn more, so you spend more. A new car, a nicer apartment, small upgrades. But if you stop investing just $500 a month, you could miss out on over $500,000 in long-term growth. The ones who stay invested no matter what, they're the ones who quietly pull ahead. They live just a bit below their means and let momentum do the real work. That's how they pull ahead while others stall. Most people won't get past this phase, but if you do, the next move multiplies everything. So where do you actually put your first $100,000? Once you've built momentum, the next move is making sure your money keeps working. That starts with a simple strategy, not risky bets. One of the most reliable options is a total market or S&P 500 index fund. It gives you broad exposure, low fees, and strong long-term performance. No guesswork needed. If you want more balance, pair growth ETFs with dividend stocks or REITs. That way, part of your portfolio is building long-term value, while the other provides steady income. Don't skip tax-advantaged accounts. A Roth IRA or 401k helps your money grow without getting eaten up by taxes. If you're self-employed, a solo 401k can be a powerful tool. And if you're looking to be a little more aggressive, you can set aside a small portion for higher risk picks. Just make sure it's money you can afford to lose. You don't need to chase the next big stock. The real win comes from showing up consistently, managing risk, and letting time take care of the rest. As income rises, it's easy to let spending rise too. That comfort zone is where most people start to lose traction. Upgrades seem small at first. A nicer place, more takeout, a few subscriptions, but over time they quietly shrink what could have been invested and compounded. Real wealth builders operate differently. They know what's coming in, what's going out, and what's being invested every month. Not in a rigid spreadsheet, but in a clear, intentional way. When your cash flow is dialed in, you can live well and build wealth at the same time. No guesswork, no overspending, just quiet growth. And once that rhythm is in place, you're ready for the final piece, automation. Now it's time to remove friction. The smartest investors automate everything. Start with auto investing. Even $500 a month in a simple index fund can grow to over $1 million in 30 years. Set it and forget it. That consistency builds wealth faster than any trend or market guess ever could. Then look for small upgrades. Can you increase your contributions by just 10% next year? Can you route your next bonus directly into your portfolio? These small moves multiply over time. Wealth isn't built in big leaps. It's built in simple, repeatable systems that run with or without you. You've already done the hard part. Now your system carries the weight. And that's everything you need to start turning $100,000 into real long-term wealth. From building that first foundation to letting compounding take over, to staying consistent when it matters most, you now have the full roadmap. So where are you right now? Still chasing your first $100,000 or already watching your money grow on its own? Drop it in the comments and let's see where everyone's at. If this gave you a fresh perspective or your next financial move, hit like and subscribe. You've already started the journey. Let's keep building from here.